Today, we are covering premium audits and deposit premiums for the property and casualty exam. Many commercial insurance policies, like workers' compensation and general liability, are auditable because the final premium depends on a variable factor, such as payroll or sales, that isn't known until the end of the policy period. To start the policy, the insured pays a deposit premium, which is an estimated premium based on their projected payroll or sales for the upcoming year. For example, a workers' compensation policy premium is calculated using the business's estimated payroll. If a construction company estimates it will have a $1 million payroll, the insurer calculates an upfront deposit premium based on that figure. Similarly, a general liability policy for a retail store might have its premium based on estimated gross sales. At the end of the policy period, the insurer conducts a final audit to determine the actual exposures. The auditor will examine payroll records, tax filings, and sales reports to find the true figures. If the construction company's actual payroll was $1.2 million, which is higher than the estimate, the insured will owe an additional premium. Conversely, if their payroll was only $800,000, they would receive a return premium from the insurer. This final audit ensures the premium paid accurately reflects the actual risk the insurer covered. The exam will absolutely test you on this process. A common exam trap involves employee classification changes discovered during the audit. For a workers' compensation policy, the premium isn't just based on total payroll, but on the type of work employees do. A roofer has a much higher rate than a clerical office worker because the risk of injury is significantly different. Let's say an insured estimated their payroll consisted of 10 office workers and 5 roofers. During the final audit, the insurer discovers it was actually 5 office workers and 10 roofers. Even if the total payroll estimate was correct, the final premium will be substantially higher because a larger portion of the payroll is now being multiplied by the much higher roofer classification rate. This is a critical concept to master, as questions will be designed to trick you by focusing only on the total payroll estimate being accurate while ignoring the change in risk classification. Another point of confusion is the difference between the deposit premium and the final premium. The deposit premium is the initial estimated payment to start the policy, while the final premium is the actual cost determined after the audit. Remember this simple phrase to keep it straight. Estimate upfront, true up at the end. This highlights the two-step process of paying an estimated amount first and then settling the final, correct amount after the policy period concludes based on the audit. For free practice questions, AI-powered explanations, and more exam prep tools, visit openexamprep.com. That's openexamprep, all one word, .com.